All right, so this is section 3 of 5 on the QuickBook Online Advanced Certification Exam. I do want to make one note. I saw somebody commented on one of my videos that QuickBook Online was having a maintenance break the other day, and it was suggested that some of the test questions might have changed, and that certainly might have happened. But I do know one thing is they most definitely changed the user interface in the Pro Advisor tab. So if you go there now, it doesn't automatically, when you go to training, just take you to the exam section. Instead, they have 3 tabs, and the third tab over is where you would click Certification tab, and that's where you would take the exams. So if you need me to show you that, just put that in the comments and I'll do it in the next video. But I think you guys, can figure it out. But yeah, they did change that one thing there, and it was suggested that maybe they changed some of the test questions. That's possible. That's always a possibility. That's always happening. They're always going to stay on top of changing that database of questions to make sure people are staying on top of their toes. So when I make these videos, this is not, set in stone. That's why I always say add any topics or questions that I might not have covered in the comments to pay it forward. So again, if that is the case and you take a section and there's, new questions on there, please make sure you add them to one of my videos. So we first start off with setting up scheduled reports. Many businesses like to provide their stakeholders, management teams, or potential investors with special reports on a regular basis. Before clients can schedule a report, they need to save it with a distinct name so that it appears under the Custom tab in the Reports menu. To do this, you would need to follow the following steps. Select Reports from the left-hand navigation pane and select Specified Reports, like your profit and loss or your balance sheet. At the top of the report, adjust the settings of the report as needed. For example, you could specify a report period to a desired setting. And in the comparative, compare it to another period drop down, you could select previous period, last year, whatever for your liking. And then you would select Run Report. Lastly, you would select Save Customization. Remember, only reports saved as custom reports can be set up as scheduled reports. So now you would need to enter in a custom report name. If it was a comparative report, you would probably add that to the title and then select Save. Note that clients can then use these save templates to create a new one. Then they can also select Share With if they'd like to share with other users and have them emailed to them. The customized report is now ready for scheduling. It could be set to I see, somehow I have a spelling error here. So you could do it on a daily, weekly, monthly, or twice a month setting. To do this, you would select back to the report list to return to the main reports menu. Select the Custom Reports tab. As you can see, the customized report that you just saved, which should be there. To the right of the report, select Edit, and then move down to Set Email Schedule. Put that slider to On. Select the desired setting in the Set Reoccurrence section, and next enter the recipient's email address and adjust the content of the email in the Email Information Center. In the Email Information section. By default, QuickBooks Online sends the report in PDF form. To send it as an Excel file, you would need to check the box at the bottom and then save and close. Using schedule reports with Ask My Accountant. You can set this up for your client through the Ask My Accountant section to address and focus on areas that they are unsure of or need to review on a regular basis. You can set it up as a report with a reporting period set to all dates. If you send this report in an Excel spreadsheet by selecting the checkbox, as we saw I just discussed, instead of doing the PDF default, you'd be able to make comments on different sections of the report that you would like to highlight. So here's where it has where you set email schedule, and then you see they have it here monthly, but that's what I'm saying. It's saying daily, weekly, monthly, twice a month, but the one we're saying here is we'll select all dates. Okay. So here's our schedule report summary. So here's some questions you might see. What are the 2 file formats that schedule reports in QBO can be emailed as? That'd be PDF and Excel, which in Excel they might write it as XLSX. What are 2 important facts about creating schedule reports? All schedule reports can be attached either as PDF or Excel files. Reports must be scheduled by using the Customize button within the report. Now, this was the question. This was the answers that looks like was a more modern question. There was one from 2020 because I started making videos and I stopped in the middle of it. But one of the questions had an answer similar to this. So I don't know. You might see it repeated like this. Only reports saved in the Custom Report tab can be scheduled to be emailed automatically, or only scheduled reports can be emailed in an Excel format. So again, these 2 answers were a little bit more outdated, but you never know because I do see that sometimes questions from that 2020 batch do come up. And here's the last question. Which frequency option are available for setting up an email schedule for a report? Daily, weekly, monthly, twice a month. So the next topic we're going to look at is the Performance Center. One unique report feature in QuickBooks Online is the Performance Center, where charts are used to deliver financial information in an accessible and meaningful way, improving your clients' access to the insight they need to understand the performance of their business. The Performance Center is available to clients with advanced subscriptions, as well as any QBOA users, when they're accessing their own accounts or when they're accessing their clients' accounts. There are multiple charts displayed on the Performance Center dashboard. However, clients can add more pre-built charts from the Quick Add Charts dropdown, as you see from here, the Quick Add. And the Quick Add Charts offer predefined charts that display clients' data in a useful way. Depending on the type of chart, clients may be able to apply filters and compare data to a previous period. So here's the selection under the Quick Add Charts, and I have here important, so you're going to want to make sure to have all of this in your notes, write all of these down. So here are the following Quick Add Chart selections: expenses over time, revenue over time, gross profit over time, net profit over time, accounts receivable, accounts payable, cost of goods sold over time, NPM versus industry benchmarks, and GPM versus industry benchmarks. We'll talk about these 2 in a second. So make sure you have all the options of the Quick Add Charts in your notes, please. All right, the Performance Center custom charts. By clicking on the top of the plus Add New Chart button, the client can create their own custom charts. Depending on what they want to track, they can choose from multiple templates. Once they choose a custom chart, the client can save it to the Performance Center dashboard for future reference. The custom charts use live data, and they are refreshed every 4 hours. So you could track one metric in each chart and create up to 25 charts. You can make charts to track these metrics. So these are the metrics that are used, and here are the icons, but I typed them out here for you. Expenses, revenue, gross profit, net profit, accounts receivable, accounts payable, cost of goods sold, current ratio, and quick ratio. But in the training section, they have it here depicted in icons. I typed them all out, so have this in your notes. These are the following metrics that you're allowed to use to create a chart. All right, visual options. Clients can choose from several visual layouts. These visual options are vertical bars, pie chart, stacked bars, or trend line. Note that the formats available may vary depending on the chart type and the comparison data chosen. As a pro advisor, the Performance Center can be another way for you to present data to your clients, especially for your Plus, Essential, and Simple Start clients, because they don't have access to this. So you could do it for them and then present it. And then by developing this, you would be able to give your client a good understanding of what the Performance Center offers, and you can give your clients accountable and helpful insight. Actionable and helpful insight. Many clients find charts easier and quicker to understand than financial statements. Charts can help clients visualize the actual progress or lack of progress in their business, enable them to recognize trends and their impact on their business. With customized charts, they can monitor the KPIs that matter to them most, Whether that's key performance indicators, KPIs, if you didn't know, key performance indicators. Whether you use quick add charts or create custom charts, it's important to understand the data behind them and how to best adjust and tailor them to your client's needs. Now let's look at trend charts. Trend charts show how data changes over time. They can help businesses quickly see whether they're on track to achieve their target goals. By default, trend charts show monthly data for the current calendar year to date, even if the fiscal year end is not December. Their simplicity makes it easy to visualize a company's business cycle and identify investment and growth opportunities. Trend charts can also indicate whether a company may need to conserve cash. Industry benchmarking. So one particular valuable feature in the Performance Center is the ability to compare your client's performance against industry benchmarks for their sector and region. The industry benchmark data in the Performance Center is based on the median values of at least 30 other QuickBooks Online client companies in the same sector and geographical region. The comparison companies will also be in the same revenue range as your client's company. So in layman's terms, you're going to be able to take similar companies that are in the same industry, in the same area, and have about the same revenue, and you're going to be able to compare them. So you can see how your client is doing compared to competition within the same area, making about the same money. For your clients to benefit from the industry benchmark feature, you or your clients first need to configure the subscription to select the industry sector to compare to and confirm the location of the operation. You can access the industry selection from the accountant settings or add or change it from the grid gear icon in the Performance Center. So here's one of them, revenue over time. The revenue by time chart shows the total sales achieved by a company over time compared to the previous year. This metric is incredibly valuable to all businesses. It can indicate that a company may want to try and increase sales during slow periods by doing more marketing, offering discounts, or reducing prices. When presented with prior period data, you can see if the trends are the same or if your client increased or decreased sales from the same period from last year. This allows you to start a discussion if needed around what is different between the fiscal periods. This is the next one, expenses over time. In the same way that the revenue by time chart revealed sales trends for a business, the expenses by time chart reveals trends in spending. This is a great way to identify seasonal fluctuations and the cyclical nature of business spending. Now, I talk about this when I teach marketing, which is once in a blue moon, but one of the things you do notice in marketing is that there are certain months of the year that are great spending months, and certain months of the year that consumers tend to be saving up for future spending. So you, as a business, would like to look at your previous year's sale trends and see where you should be focusing on. So for example, Bath and Body Works, that's one of the ones that we use in marketing. They saw that their sales were pretty low around January and toward the end of the summer. And so that's when they have the annual and semi-annual sales, and they're giving stuff at 50 to 75% off. And so even though they're selling their items at a great discount, they're getting rid of items that are, out of season, as well as they're keeping their sales numbers up there. The chart below shows that the spending increases significantly in December. Likely the company makes purchases towards the end of the year to reduce the amount owed in taxes. Accounts receivable. This chart shows the total amount of money owed to a company by its customers, broken down by the aging period. It can highlight important issues such as overall amounts owed and the related risk of non-collection of outstanding receivables. If your client had to set a goal to keep receivables over 6 months old to a maximum of 5% of a total AR, it would be performing below its desired level, looking at these numbers. You could share this information with your client and use it as a springboard to look into the cause and find solutions. Note, you can also customize this chart to filter by location, customer, or projects, or focus on specific aging periods as shown in the image. Accounts payable. This chart shows, as of a specific date, how much a company owes its vendors and how long its payables are overdue. By reviewing the accounts payable by aging period chart with clients, you can coach them on how to maximize cash flow by paying within terms and utilizing early payment discounts like the 2, 10, and 30. So this means you'd get 2% if you paid off in the first 10 days, or you have to pay net by 30. So there's actually a formula for you to figure out if this is, a good choice or not, to pay it off in the 10 days and get that 2% discount, or actually hold on to your money for the 30 days. You learn that in finance. All right, gross profit over time. Gross profit over time is a measurement of gross profit availability. Gross profit available to cover the organization's overhead expenses. That would be revenue minus cost of goods sold, and that equals your gross profit. Your net profit over time. This chart shows the company's net profit compared to previous periods. So the net profit is the amount of money that is left once your client subtracts their total business expenses from total revenues. In other words, it includes almost all financial transactions in a business, with the exception of tax payments, which are not calculated until after determining your net profit. The gross profit by time and net profit by time charts help you show clients how strategic changes impact their bottom line. If a client has not been profitable and takes steps such as changing prices and cutting costs, this chart would track the impact of those changes. Now we have cost of goods sold over time. This chart shows how much a company paid for products and services sold to customers. This chart should follow the same trend as the gross profit by time chart, which tracks costs directly related to sales. This chart can especially be insightful for clients whose cost of goods sold or cost of services fluctuate over the year. It can suggest when clients might want to adjust their pricing to account for different operating costs, or when they should buy in bulk and take advantage of lower prices for the supplies they need. And here's the last one. The NPM and the GPM versus the industry benchmarks. Remember a minute ago I was saying the benchmarks are where you look at up to at least 30 common companies in your area that have around the same revenue. So the NPM versus industry benchmark chart shows a company's net profit margin over time compared to the margin of other companies in the same industry. Companies can see how their performance compares to the median of other companies of a similar size, location, and industry. And we'll see the same thing with the gross profit margin. So this indicates whether the company's actual gross profit to revenue ratio is at an appropriate level. It allows clients to model how different pricing structures would affect the profit margin. The gross profit margin percentage on the chart is calculated as gross profit divided by sales times 100. That would give you your gross margin percentage. How could you use the custom charts in the Performance Center to offer targeted financial support to your clients? Well, let's say maybe for a travel agency, you would create a tracking revenue by travel consultant. So here we have a company that may use classes to monitor the sales performance of various consultants that they utilize. To create this chart, the Performance Center, you would go to the plus Add New Chart button, and in the Create Your Chart screen, you would enter the chart name and the desired period that you want. In the Group By dropdown, you would select classes, and you would add each consultant's name to that class list. This prompts the chart to build from a live data set. Note that clients can also filter the data displayed and compare it to other time periods. Then you could select Add to Dashboard button for the chart to display on the Performance Center home screen, and it will refresh every 4 hours. Here's another one, tracking sales performance. In another example, let's say a toy manufacturer wishes to compare the sales performance of 3 different model airplanes to decide which to produce at different times of the year. They should select plus, add new chart, and then revenue. The chart title is inputted and the fiscal year period is set. And in the Group By dropdown, they should select items because we're now looking at actual products. So they would select items. Note, you could also filter by location if you wanted to compare them at 2 different stores, let's say, or 2 different regions. Finally, they need to check the previous year's same period option in the compare section to set up a comparison to view the sales against the previous year. And here's the last one, tracking labor costs. Let's look at a project-based client that needs to update on the estimated subcontractor costs and completion dates of a project. Once the project data is in QBO, it's possible to generate the projections and comparisons that the business needs. So you would go to the plus sign, add chart title. The plus sign, add chart title. You would select expenses and then enter the name of the chart and the time period. And in the group by dropdown, you would select expenses and you would add 1099 subcontractors. Finally, you would check previous year's same period option to do the comparison. So here's our Performance Center summary. Name 2 quick add charts in the Performance Center. Now remember, I told you to write them all down, but here's just 2 random ones that could be in a list. Accounts receivable, net profit over time. But in your notes, you should have all of them. Here's another question. A client had asked you to create a custom chart to monitor the sales of a new product they just started selling at 2 store locations. They want to see how the product is performing in each store. Which option would you choose for them to create this chart? You would first say group by item. Why? Because this is a product. And then you would filter by location. So we saw that with that toy example. So group by item because it's a product, and then filter by location since you want to compare it with 2 different locations. And the last question, which 3 metrics could you use to create a custom chart in the Performance Center? Again, I gave you all the metrics and you should have them all in your notes. But here's, you might see from a list down these 3 particular ones: cost of goods sold, net profit, and quick ratio. Oh, we have more questions. A client is looking for a way to easily access the risk associated with extending credit to her customers. Which quick add chart in the Performance Center would you provide for this information? You would select accounts receivable by aging period. Who has access to the Performance Center in QBO? It's available to account users of any company subscription, and then it's also available to admin users of the advanced subscription. And here's the last question. What 3 pieces of information does the Performance Center use to perform industry benchmarking, industry sector, location, and revenue? So remember, we were saying common companies in your area and about the same around revenue point. All right, the next topic is tagging, advanced tagging. Tags and tag groups are available at all QuickBooks Online subscription levels. When set up correctly, they allow you and your clients to categorize transactions and create meaningful reports. However, this requires knowledge of the simple and advanced applications of tags. Tags are customizable labels that clients can assign to transactions such as invoices, expenses, and bills. Clients can also create tag groups which allow them to run reports to see how specific businesses areas are performing. How do you turn tags on or off? You would go to Sales section in the Accounts and Settings. So you go to the gear icon, you go to Accounts and Settings, you're going to go to the Sales tab, and then you're going to see Tags, and you're going to turn the slider on. So you should see it here. You're going to make sure you slide it over on. Under the Sales Format Content area, the Sales Form Content area, under Tags, you would slide it on. Adding tags to transactions. After turning on tags, go to the Expense section of the Accounts and Settings and turn on Show Tags Field on Expense and Purchase Forms option. This will make the tags field visible on your purchase forms like checks, expenses, bills, vendor credits, credit card credits, and purchase orders. Using tags to transactions. Select the tag field to display a list of existing tags. Clients can add multiple tags from the list to a transaction. What if the client wants to create a new tag or tag group? They could do this by selecting the Manage Tag link on the transaction form. This opens the Manage Your Tag drawer where the client can choose to create tags or tag groups. So you would, in our invoice, you would see over here, this is your tag section. And then all the way on the right, on the top, you'll see a little blue link that says Manage Tags. And this is the pop-up window that comes up, Manage Your Tag. And you would fill in the appropriate information. The Tags tab in the Banking Center shows a summary of the money in and out by tag group and how many transactions are in each tag group. There are two ways you can view a list of transactions by tag from here. You could select the Transactions link, indicating the number of transactions for a particular tag or tag group, or you could select See All Untagged Transactions above the list of tags and tag group. If you select the transaction link, the transaction by tag list will be filtered for that tag or tag group. If you select See All Untagged Transactions, the transaction by tag list will be filtered for untagged transactions. In either case, you could select the X next to the filter to remove it. Tags versus classes. Well, while class tracking is only available in Plus and Advanced, you can use tags in all QBO subscriptions. This means your clients can save money by using tags if they don't need the other Plus or Advanced features besides class or locations. Class provides the ability to see income and expenses for different business revenue streams, so they work well for creating a profit and loss report with comparison columns. What are the drawbacks to using class tracking? Once you begin using classes, you should assign one to every transaction to produce accurate reports, even if it's just an overhead expense. Otherwise, a not specified column will appear on the report. Furthermore, classes are intended for more permanent categories, so they aren't suitable for time-limited categories such as events. And then also the limitation of the 40 total for Plus users. Locations. As with class tracking, locations also has that limited 40 for the Plus users. And locations are useful for showing selected business segments and you to use location columns in your profit and loss reports. What are the drawbacks? A transaction can only have one location, and some transactions don't have a location at all. So location tracking probably won't meet your needs if you have income and expenses associated with multiple places. Further, transactions without a location automatically are added to the not specified column in your reports. Custom fields. In some respects, custom fields are similar to tags. They are great for tracking unique information about each transaction, such as the purchase order number on your invoice. But however, QBO Essential and Plus only allow 3 custom fields on sale forms. If you want to assign enhanced custom fields to transaction customers and vendors, a QBO Advanced subscription might be the best solution, and then you're talking about doubling your monthly rate. QBO Advanced lets you assign dozens of custom fields to transactions and list names, including drop-down lists that behave like tags. On the other hand, tags can be applied to most transactions, but not to lists. Tag benefits. Tags have several benefits over classes, location, and custom fields. You only use tags when needed instead of on every transaction. You can use tags to group transactions together for reports. You could assign multiple tags to one transaction. By creating several tag groups, you could analyze transactions against different criteria. All versions of QBO include up to 300 grouped tags and unlimited ungrouped tags. You could create up to 40 tag groups in the Simple Start through Plus and unlimited tag groups in Advanced. You can use one tag per tag group in any transaction, but you can use tags from multiple tag groups and unlimited ungrouped tags. You could search for tags in the transaction by tag screen. And finally, remember, you can still apply tags even if you're already using classes, locations, and custom fields. What are the limitations to tags? Well, 1, you can't print them. They're only for internal use. 2, they do not appear on QuickBooks Online Payroll. 3, like locations, tags cannot be added to target lines. If a delay charge has 1 or more tags, those tags populate in the invoice that brings in the delay charges. However, when 2 or more delay charges have different tags, the last delayed charge tag will overwrite the tag from the earlier delayed charge on the invoice, even if they're not added simultaneously by clicking Add All. And the last one is billable expenses. Billable expenses do not bring tags over into an invoice. The billable expense charge that the QuickBooks Online generates when you mark an expense as billable does not have the field for tags. Now remember, tags is something that I've been saying in my videos are still fairly new, and I think a lot of things will be changing in this particular section, so look out for that. Batch assign tags. You could go to Tags tab in your Banking Center, and the Money in, Money out section displays the list of tags currently in use. Select any hyperlink in the transaction column to show the transaction for a selected tag or tag group. Select filters to change the filter by type of transaction or by date or even by customer or vendor. When done, select Apply, and next select Tags. Check the Show Untagged Transaction box to display all transactions that have no tags assigned to them. Remove the filter for the original selected tag or tag group by unchecking the boxes in the dropdown. If needed, use the checkbox in the dropdown to filter by other tags. When done, select Apply. Check the boxes next to transactions to batch assign a new tag. Then select Update Tags from the dropdown, dark banner, and then choose Add Tags. Note that the other option is to remove existing tabs from the selected list of transactions. In the drawer, select the tab, whether the group or ungroup that you want to batch assign, and then select Apply. You can also use rules to assign tags directly from the bank feed. This ensures that tags automatically apply to the appropriate transactions. While this method is quick and easy, remember to always be cautious when automatically applying rules. To add tags using rules, select Rules tab from the Banking Center, then select New Rule. Enter the information in the Create New Rule drawer as you normally would. Add the tag to be automatically added to the transaction affected by the rule in the tags field, and then select Save. Tags and reporting. So all categorization options help you and your client drill down to find the information you need to understand how the business is performing. Tags can complement other categorization options. When tags, locations, and class work together, you could show how different categorizations relate to each other. You could only create two types of reports with tags: profit and loss by tag group report and transaction list by tag group report. When tags are grouped, your client can create reports that show all the tags in a group at the same time. For example, your client can run a profit and loss by tag group report to see the income, expenses, and net income listed by that tag group. There are two ways to run a profit and loss by tag group report. Run the report from the Report Center, or select Run Report from the Action column on the Tags tab in the Banking Center. If clients run the profit and loss by tag group report from the Report Center, they can then filter it by tag group to show all the income and expenses transaction by that group. If clients run it from the Action column, then the report is automatically filtered by that tag group. Note that clients can only select one tag group at a time when customizing reports based on tag groups. However, they can apply other customization options, including class and location filters to that report. By default, the report is called Profit and Loss by Tag Group, but clients can change the title to reflect the tag group they want to display by selecting Save Customization. They can save the customized report to appear on the customized report page. Clients can also adapt the Profit and Loss by Tag Group report to show the transaction affecting the net income of each tag group. To do this, they would go Display Column By and select the required tag group, and then select Net Income Amount under the tag group name. This will run a profit and loss detail report for that tag group. Clients who also run a conventional profit and loss report and use tag groups as filter to achieve the same result, that would also be your profit and loss by tag group report. Clients can also find the transaction list by tag group report under Sales and Customers in the Report Center. They can select any individual tag group or all ungrouped tags from the Group By dropdown. So here's my tag summary. There's not many questions, and as I said, tags we'll be adding on, and I noticed they didn't have any on the reports, which I found odd, so I still would write down all those reports in my notes if I were you. What are notable facts about using tags in QBO? Tags are not visible on printed invoices. QuickBooks Online payroll transactions cannot be tagged. Tags can be added to rules, and tags can be batch assigned. That looks like it'd probably be two different questions, maybe. Where can you identify untagged transactions and batch add tags to them? You would go to the banking tab, click tags, and go to any transaction column hyperlink. What type of scenario would tagging be helpful in? It would be helpful for a company that has multiple sales reps, commissions, rates, managers might have to have tracking for each sales transaction. So that might be an example of wanting to use tagging. And like I said, also make sure you have the information on the reports in your notes. Now, this is the whole second half. It's all about inventory management. All right, so inventory management is the rest of this PowerPoint. There's a lot of questions on there. Businesses such as retailers, wholesalers, and distributors need to fulfill orders quickly to meet customers' expectations. The business also needs to know what inventory items they have on hand, how much they're worth, and what profit they're making on selling their stock. This requires a good understanding of inventory management and a tool that can manage inventory effectively. With FIFO inventory management, QBO always considers the first units purchased, or first in, to be their first unit sold, first out, hence FIFO, first in, first out. It will then adjust inventory and cost of goods sold accordingly whenever inventory is sold. The value of an inventory item in a QuickBooks Online account is the amount that was paid for the item. There are different methods used to calculate the value. Recording the purchase of an inventory item increases the inventory asset account on your balance sheet by the cost of the item and increases the quantity on hand for that item. Recording the sale of the inventory item decreases that inventory asset by the original cost and also decreases the quantity on hand for that item. Recording the sale also increases the cost of goods sold because it costs you money to sell that product. You had to buy the product first to sell it. So under the perpetual inventory system, it's a four. I think I have the journal entry too. It's a 4-part journal entry because now you have to take into consideration your cost of goods sold, of the original cost of the item, and then also increasing the sales by profit income account by the amount the customer paid. So the difference between the income amount and the cost of goods sold amount is your gross profit of that item. We will look at the FIFO inventory tracking system in QuickBooks Online. Each purchase becomes a cost layer where QuickBooks Online tracks the quantity purchased and the unit cost of that purchase. As sold items are saved in an invoice, the cost of goods sold value that is posted will be the cost of the oldest cost layer. So from the gear icon, you're going to go to the accounts and settings. You'll go to the sales tab, and in the product and service section, you'll use the slider to enable track inventory quantity on hand. Once you do that, you'll see a pop-up window that says turn on inventory tracking, and you would click continue. There's two other options that you most likely will turn on, and that would be show product service column on sales form, and this adds the product service column on sales form so your client can choose from a list of products and services to include. Turning it off disables inventory tracking, purchase orders, and the ability to use items on both sales and purchase forms. So you must have that turned on. And the last one is track quantity and price rate, and that adds quantity and rate fields to the sales form so that your client can track the information for product and services. This setting is also turned on by default. If your client turns it off, they'll be turning off inventory tracking. So they need to have all these three on. Track inventory quantity on hand, show product service column on sales form, and track quantity and price rate. It's all in the same section. Businesses such as retailers, oh, wait a minute. Did I just read that? Yes, I did. I don't know why this is repeated. Sorry about that. We have already looked at setting up inventory, but let's review it. So you would go to your product and services page, and from your left-hand navigation, you can go to the sales, or you can go to the gear icon. But we'll select new, and then you would select inventory. So I always like to go to sales and products and services and then select new. Then select inventory. You're going to put in the name of that product. You can also upload a picture or add a SKU number or assign the product to a category or define a class if the class tracking is turned off. It's turned on. And then you can enter an initial quantity on hand. But it is encouraged to always enter 0. The reason being is because when you enter in anything here, it automatically will go to your opening balance equity. So you're better off putting in 0 and then just putting in the expense or purchase later. Only clients already in business but new to QuickBooks Online should enter a non-zero initial quantity on hand. Companies already using QuickBooks Online should derive an increase or decrease of this product from the purchase and sales transaction for this item. They should only increase the quantity of new products through purchase forms. Next, you're going to set as of date. Make sure they set the date to one before any transactions involving this product. Enter a reorder point. This is the minimum quantity of product that the client wants to have on hand. When the quantity in the inventory goes to or below this number, a client will receive a reminder to order more. Although this is not a required field, it's good practice to enter reorder points. And then next, you're going to set the inventory asset account. After that, you would go to description. This description will be printed on sales form. Then add a sales rate, price or rate for the product. This is a default price that will appear on all sales forms. You can override it manually if you want, in case you're doing a sale or you're charging more for whatever reason. Next, select the appropriate income account from the drop-down. Now, this would have to be tied to a sales of product income account. And then you would set your sales tax category and then your purchasing information. There you would see cost box, and you would need to select an expense account. That would have to be a cost of goods sold type of account. And then next, clients would choose a preferred vendor for this product. And when reordering this product from the product and service list, this vendor's details will automatically appear on the purchase order. Finally, you would select save and close. Your client can import inventory items from a spreadsheet. The best way to do this is to download a sample file to get the field names, erase the sample data, and replace it with the company's actual data. Items not set up in QuickBooks will be added automatically as new items. Items already set up in QuickBooks will be updated. This is useful when you want to change prices for multiple items. Clients can track inventory item orders for a vendor via a purchase order. Note that once you have added or saved an item, quantity on purchase order appears as a field when you go to edit that item. You can also display this column in the product and service list. Select the grid gear icon on the left-hand side, or on the list itself, and check the box for the quantity on purchase order. As with other lists in QBO, your client can't delete an item, an inventory item, or change the item type once it's been made as an inventory item. This is true even if they haven't used that item in a transaction yet. But like what I always say with the chart of accounts is, if you're not using that item, you can make it inactive. Excuse me, I'm sorry, I'm a little sick. You would do that by selecting that option from the drop down next to the edit arrow in the product and service list. But be careful when doing this, because making an inventory item with a quantity on hand inactive will zero out the quantity and value and increase the inventory shrinkage account. Also note that making an item inactive doesn't affect any previous transaction. QBO won't allow 2 items with the same name in product and service list. So if you wanted to now set this item as a non-inventory item, you would just need to change the name slightly. Make sure to zero out the inventory item first before making inventory item inactive if your clients want to post it to a different account. Unlike other item types, if your client changes one or more of accounts assigned to an inventory item, the asset, income, and expense account won't be given the option to update the item linked accounts in historical transactions as well. So you just have to input that again. Instead, QuickBooks Online will automatically update all transactions throughout history involving this item using new mappings. It won't ask for permission to do so, and it won't notify the user of any changes. The one exception is if the transaction being adjusted are in the closed period. Then, if you have a closed date password, that will be asked to be entered. If not, you would just have this warning sign that would come in letting you know, do you still want to proceed? You are, changing something that's within a closing period. Products categories are a way to group similar products and services together. They are particularly useful if a client has similar product names that could get confused or mixed up in transactions. By assigning products and services to individual product categories, your client will be able to search for its item by category. There's two ways that you can create a product category. One way is to create it by going to the gear icon, all lists, selecting product categories. And that would be under the product and service section. You can also access product category page by selecting sales or invoicing from the left-hand navigation side, and then selecting product and services, and then using the more drop-down and say manage categories. From here, select new category. The client can create a hierarchical list of categories as well as subcategories within the categories. To make a category a subcategory, you just need to check the is a subcategory box and select the parent category from the drop-down, and then you would click save. The other way to do it is from the gear icon, go to product and services, select new from the product and service list, enter the product's information as needed. In the category box, select add new, assign a name to the category, and save. Enter the rest of the product details, and then finally save and close. We can see that the new category would be in the new item within it. It'll be on the product and service list. To assign existing products to a category, in the product item row, select edit and assign and desire categories in the category box. When using the item grid on a transaction, your client can either enter the product category name to get a list of all the product and services added to that category. But note that you can't actually use a product category on a transaction, meaning the product category name itself cannot be used on the transaction. Instead, it's just a drop down, and you have to select one of the listed products in that category. They're just there to help a client filter and sort out their products and services. The product category is also included in the product service dropdown when your client is purchasing items using checks, expenses, or bills, or when they're creating an invoice. We're not in that section. They help them make sure that you're choosing the correct item. Also, when you and your client run sales, purchases, and inventory reports, the product and services are grouped by category. This gives you and your client additional helpful insights into sales and asset values by product categories. QBO Plus and Advanced track the inventory quantity on hand through purchases and sales transactions. Inventory is increased when items are purchased and decreased by customers buying items. If used correctly, this gives real-time counts of what is on hand. So you need to make sure your clients understand the correct inventory workflow to follow. Clients can also use the purchase order feature to track which items are on order. Clients should use the item details grid to record the purchase of inventory items when they enter a purchase transaction through a check, expense, or bill. A transaction where the client purchases inventory increases the inventory asset account, which is your balance sheet account, by the quantity multiplied, and the cost increases the quantity in the inventory and its value, excuse me, which will remain in the balance sheet until it is sold. Clients should record the sale of inventory items, including quantity sold, on an invoice or on a sales receipt. With perpetual inventory, an inventory sale is recorded as follows. You would decrease the inventory by the quantity and related costs, and you would increase the cost of goods sold by that same amount. So here's that journal entry I was saying it'd be in 4 parts. I know my students tend to be like, huh? But under Accounting 101, we talk about the perpetual inventory system, so it shouldn't be. So here you see there'll be 4 accounts affected. Now this is an invoice, so our accounts receivable and our sales of product income, our revenue account is affected, obviously. So we're billing our client and we made revenue. But then under the perpetual inventory system, you immediately acknowledge the cost of goods sold. So you're putting what you sold these widgets at, and then you're going to take it directly out of inventory. so that we could show our true amount of products on hand. So that's the four line journal entry. Reports that track inventory. By default, QuickBooks Online has 3 reports that track inventory. One is the Inventory Valuation Detail Report. This shows transactions for each inventory item and how they affect quantity on hand, value, and cost. Then there's the Inventory Valuation Summary Report. This shows the quantity on hand, value, and average cost for each inventory item. And the last one is the Physical Inventory Worksheet Report. This lists inventory items and includes a space to enter a physical count so clients can compare it to the quantity on hand on QuickBooks Online. Partial purchase orders. So QuickBooks Online Plus and Advanced can track purchase orders. This is a particular helpful feature when your client is tracking inventory so that they can see what's in stock and what's on order. What if a client supplier runs out of stock and can only deliver part of a requested order? Well, QBO can receive parts of an order against a purchase order and keep the order open to update as more units are delivered. To enable this, your clients first need to create a purchase order for the total amount of the order. Then when they receive the partial shipment, they should enter a purchase transaction. Add the purchase order to the transaction. Change the quantity to what was received. When the client opens the purchase order again, they can see that QuickBooks Online added a receive and close column. The quantity column shows what they ordered and what they received. The difference between these two columns is the amount of the order that's still open. Once the client fully receives a line item, QBO then marks that line closed. Clients can do the following with purchase orders. Now I put over here important, so I want you to have all of these in your notes. You could create a posting purchase transaction such as a bill, expense, or check and partially receive items on that purchase order. 2. You could close individual lines on a purchase order. 3. You could create multiple transactions from one purchase order. Next, add multiple purchase orders to one purchase transaction. Note, be sure to close any lines on the purchase order that will never be received so that the purchase order does not continue to appear on an open purchase order report, meaning if they told you we're just out of stock, we're not going to get that in anymore, and you need to zero that out and take that off. Adjust stock levels to account for damaged or lost items or even if a mistake during a physical inventory check. So there's 2 ways to enter an inventory adjustment. One way is to go to plus sign new and select Inventory Quantity Adjustment. Enter the date of the adjustment, select Cost of Goods Sold as the Inventory Adjustment account, and then select the product to be adjusted. QBO loads the quantity on hand as of this date. Enter either a new quantity or change in quantity, and then save and close. The other way to access the Inventory Quantity Adjustment screen is through the Product and Service list. So you can go to the Product Service list, and next to the product to adjust the quantity of, you would select the edit in the action column and then select adjust quantity. This opens up the same screen as you would have had as described in the previous slide. Note that when saving the inventory adjustment, QBO automatically creates an inventory shrinkage cost of goods sold account. It records the inventory adjustment to both the inventory asset account and the inventory shrinkage cost of goods sold account, unless an account was named otherwise. For a large number of inventory adjustments, adjust the quantity for multiple items on one screen. To do that, open up your product and service list, select filter icon, and for type, select inventory and push apply. Mark the checkbox next to the product to be adjusted. Then select batch actions on the drop-down and select adjust quantity. QBO then loads all the selected items on one inventory quantity adjustment screen. Add the adjustment date and inventory adjustment account, then make the changes to the quantity as necessary, and then save and close. Deleting an inventory adjustment. So suppose you just did all of that and then your boss said, wait a minute, that's not the procedure I want us to take. You need to delete that immediately. You would be able to do that this way. You would open up your chart of accounts and next to inventory asset account, go to view register, and then the register will come up and you would see that inventory adjustment you just did, and all you have to do is select delete and then click yes to confirm. Adjusting for donated inventory. Your clients may sometimes want to donate products from their inventory to offer samples to customers or support charities or other organizations. QBO expects any inventory decrease to be matched by an increased income. So in this case, we're not selling anything, we're just donating it. So we would have a zero income, right? So how do we do this? So first, your client needs to record the item leaving inventory. To do this, they should create a $0 sales receipt for the product that has been donated, as if it had been sold for $0. But the reason why you would do this, a donation versus adjustment, is because you're able to select a customer and kind of, in a way, write off that money you've lost. This sales receipt reduces inventory without increasing income. However, it does increase the cost of goods sold account balance. Your client wants a donation account for donations or promotion accounts for promotion samples to be affected, then you need to make sure you select those. How can you make the correct adjustment? To correct the $0 sales receipt effect on the cost of goods sold account, you or your client need to create a journal entry to debit the donations or promotion accounts by the value of the inventory credited to the cost of goods sold. Now remember, if you're using Fifo with the layered, you would need to know exactly what that is. So to do that, once you make that $0 sales receipt, go back into that transaction, go down to the bottom where it says more, and look at the transaction journal. When you look at the transaction journal, that's where it will tell you what your cost of goods sold is, and then you can make that a proper adjustment to the cost of goods sold account. I hope that makes sense. Your client can record transactions such as promotions, donations, gifts, and free samples to have no income value. Let's see how we would record a donation of a product. Watch out. So you go to plus sign new, you'd go to sales receipt, and in the customer field, you'd select whoever you're making the donation to. Make sure you have the proper date. And deposit to, you want to put a clearing account here. I did a video a while back on clearing account. So you want to put one of your clearing accounts. The clearing account is a bank account type that should always have a zero balance at the end, because you'd be it's just holding that monies for some reason. And in this case, it's not real monies. So you'd be able to do a journal entry and explaining what that why you put it in that clearing account. In the product service section, enter the details of the donated item. Change the rate to $0, and then finally click save. This sales receipt creates a $0 transaction in the clearing account. It does not record any income, but increases the inventory asset account and increases the cost of goods sold account. Decreases. It decreases your inventory because it get rid of those items that are about to expire, but it does have you increase the cost of goods sold, which it's part of an expense you could look at as promotions. Remember to check the transaction journal by selecting more from the bottom of the screen and looking at your transaction journal to determine the correct value based on the FIFO layer the donation drew from. Your client will want the transaction to appear in the appropriate donations or promotions account. To do this, create a journal entry to move the cost of the items of cost of goods sold into the correct expense account. So as I was saying, if it's a promotion, you put it as, a promotional expense. So to do that, you go to plus sign new, you'd go to journal entry. Since the item was donated, we need to create a donations expense. So we're using donation expense, not promotion in this one. And in the account section for the first line, you enter donations and then select add donations to the, we don't have an account, so we're going to create a donation expense account. And they're telling you here, make it expense as the accounts type, and the detail type should be charitable contributions. And then click save. In the debit field, you would put whatever the monies you saw from that transaction journal. Okay, and then it says here you would end up on the other end taking it out of cost of goods sold account. And you would click save. You might think that clients can use an inventory quantity adjustment to reduce the inventory for donations. However, an inventory quantity adjustment does not allow them to enter the name of the customer organization they're giving the donated goods to kind of have an audit trail. And also later to follow up at and make it, instead of a cost of goods sold, putting it to the proper expense account. So here's my inventory summary. There's a lot of questions here. A client wants to donate 5 widgets set up as inventory items to a charity. In the item setup, the cost was $5 and the sales price was $10. 50 widgets were originally purchased at $6 each. What is the effect on the general ledger when it is recorded on the sales receipt? So we have it as the item setup is costing $5. So that would be our cost of goods sold, $5, and we sold 5. So 5 times 5 is 25. So we would debit cost of goods sold, $25, by acknowledging our expense. And then we would credit inventory because we're taking it out of inventory. So we would credit inventory, $25. A client using and tracking inventory on hand, they purchased 10 widgets at $10 each and 10 widgets at $15 each. All the widgets are sold in one transaction. Considering QuickBooks Online use of Fifo method, what is the best way to see which line items are affected in the transaction? We just looked at that as an example. Open up the customer invoice, and then on the bottom where you see more, select the transaction journal. And there's where you'll be able to see what exactly the cost of goods sold was. Because remember, under FIFO, you could have products that you purchased at different amounts at different times. So to be able to see exactly what you incurred as your cost of goods sold, you can look at the transaction journal. So that would be your answer. Go to reopen that invoice, go down to the bottom and look at the transaction journal. How can you change an actively used inventory item to non-inventory item? You would first zero out the quantity of the inventory item, make it inactive, and then set it up again as a non-inventory with a slightly different name. Because remember, I was saying you can't have the same name. Which of these two statements are true regarding tracking inventory in QBO? Recording the sale of an inventory item decreases the inventory asset account by the original cost of the item and decreases the quantity on hand units for that item. And then recording the purchase of an inventory item increases the inventory asset account on the balance sheet report by the cost of the item and increases the quantity on hand unit for that item. What are 3 requirements that might lead you to guide your customer or your client to choose a third-party app to handle inventory? Just actually had somebody follow up with me on this with Katana. And I don't know if you guys are familiar with Katana, but they were having a hard time setting up Katana. And just as a side note, if anyone's interested in this, we ended up having to go through their Katana subscription. So they had to like log into Katana and link through QBO through Katana and not through the apps section. So I don't know why that happened. I'm not sure if that's something new or it's always been like that. I've never dealt with that before. It was my first time. That's why I decided to say this. So what are the 3 requirements? A lot of times when you're dealing with a manufacturing company where they have expiration dates, units of measure, or lots of serial numbers, you might want to suggest to your client that they get a third-party app, and Katana is an example, where they're set up to maintain large numbers of inventory. Also, when you're dealing with manufacturing, remember there's different sections of mess. You have the raw materials, you have inventory in progress, and then final. So there's several different sections that the inventory goes through during production. So because of that, just having a QBO, even if you had an advanced account, it might be too tedious for your accountant or bookkeeper. So you might want to ask them to get a third-party app if they have, expiration dates, units of measure, or lots of serial numbers. Here's another question. How can you enable inventory tracking in QBO? You go to the gear icon, accounts and settings, and sales. What happens if you make an inventory item with quantity on hand inactive? The quantity and value of this item is zeroed out, and the inventory shrinkage account is increased. After doing a physical inventory count, you realize that many inventory items need to be adjusted. What is the most efficient way to adjust the inventory? Select the items on the product and service list, and then select adjust quantity under the batch actions. Now we do in the batch action because of the term, because they said you realize many of the inventory items. So that's why I would assume batch action would be appropriate. A client has a handful of inventory items that are close to their use by date. They decided that they'll send these products to customers free of charge so they can use them as samples. Which method of adjusting should be used to ensure that this record This is recorded against the customer. You would create a $0 sales receipt and then adjust the journal entry to adjust the cost of goods sold as promotions. So in this one it said promotions. I guess you should also look out for donations, because in the example they gave in the training section, it was donations. What 4 actions can be taken with purchase orders for inventory items in QBO? Okay, so remember I told you to write all of them down, but here's just 4 of them. You partially receive items on the purchase order. You could also close individual lines on a purchase order. You could add multiple purchase orders to one purchase transaction, and you could create multiple transactions from one purchase order. What 3 statements are true regarding product categories? The product and service list will display items by product category. An existing category or new product category can be specified when adding a product or service item. And entering the name of a product category in a purchase or a sales transaction produces a drop-down list of product and services that are in that category. Because remember, you can't actually use the product category itself. Instead, you're selecting from a drop-down list. Which 3 reports are readily available in QBO for inventory? So which inventory reports are readily available? Inventory valuation detail report, inventory valuation summary report, and physical inventory worksheet report. When turning on inventory tracking in QBO, which 3 features should be enabled? You should enable track inventory quantity on hand, track quantity and price rate, and show product service column on sales forms. All those 3 have to be on. When recording inventory being donated, why shouldn't you use an inventory quantity adjustment? Because an inventory quantity adjustment does not allow you to enter the name of the customer that you're donating to. So that's the main. And so the last question I had here, they had a Laura's Landscaping, and I did a video 2 years ago that I went over this in detail. So I would say I saw the question and it's pretty intense, and I went over it in detail. It's from my QuickBooks Online Advanced Certification Section 2 2020 video. I just took a snapshot of the actual question that I have here in my database, and then I still have the PowerPoint, so I was going to bring up the answer key. But if you don't understand my answer here from the answer key, I would tell you to go ahead and go to the video to look it up. So actually, sorry, I logged out of it a while back, so it has to come back on now. Where is it at? And there it is. There it is. Laura's Landscaping scenario. So the scenario is the one I just gave you a second ago. If you want to stop it and record it or take a picture of it. This is the different things that happen in the month of October. And then they ask you to calculate, I guess, I think it's ending inventory. I'm not even sure anymore what it is. But if you watch the video, I go through it thoroughly with you on how I got the answer of $780.50. And that seemed to be the only FIFO question. And if you look, I went over a couple of them, and I saw that they were widget ones as well. So you could go back to that video. Just if you do poorly in this section, I would say go back to that 2020, because it does seem like it is pretty much a line. There's not too much new in this particular section that they covered. So again, if you don't understand what I'm talking about here, go back to my other video. That's why I put it as the last question that I have in 2020, the QuickBooks Online Advanced Certification Section 2. I posted it in 2020, and I go over thoroughly this FIFO question. And that's it. That ends, that's the last question I have for this section. So give me another week or a little so. If you could tell, I'm a little raspy. I'm a little sick, but I will try in another week or so to get section 4 and then 5 out to you. All right, take care.